So we got 3 clues, right? First clue was what? First clue was the outside day. I'm above the previous day's range. And of course, an outside day tells me above the previous highs, you're buying pullbacks. The next clue we got was the ABCD pattern. Mark up your A, your B, and your C, and that gave us where D was. A to B equals C to D. So that puts us now a target and a potential selling opportunity overhead. And the third clue we saw was that dollar wedge, right? When the dollar index is wedging, we know it's always going to be difficult, and we've got to be very careful when that dollar's in the middle of the wedge. Remember, this morning we talked about this. The best way to use the dollar is to find those turning points in the market. All right, so 3 clues today. What happened was we had lots of news this morning. And from 8:30, literally from 8:30 until 9:30, it was nothing but news. 8:30, 9 o'clock, 9:15, 9:30 U.S. Open. And then after that, we had 10 o'clock housing index. We had 10:30 crude inventories. So what happened is we're going slopping around here. 8:15, 8:30 comes out, and price just jumps. Well, sure enough, we go where? To the top of this bull channel. Right? Can't buy the highs. I wanted to sell, but we couldn't sell. Right? No sell opportunity here. By 9 o'clock, we keep going. And by 9:30, here we are. We are 2/3 of the way up to that reversal zone. So we kind of, whoop, right? Price just slipped away from us and starts to launch. Now, my theory is it broke above the previous highs. Of course, then you're running stops. That's close to that 100 big round number, which is right there. So, of course, above 100, there's more stops being triggered, right? You're running all the stops now. All those short sellers are placing their stops above the big round number of 100. And price just took off. Now, at the same time, we also had some very bullish dollar sentiment coming out of the news. Housing market was better. Inventories came out flat. All right, guys. CPI was lower than expected. We had a lot of bullish news for the dollar. And whatever is good for the dollar right now is good for the recovery. What's good for the recovery is good for demand on crude oil. And we assume that's what led to, right, this big spike in price. News comes out 8:30, CPI. Now this got the party started. This lit the match. CPI, consumer prices were lower than expected. That means inflation is not a problem. When major money managers hear inflation is not a problem, that means they're considering more stimulus from the Fed. The only reason why the Fed will stop printing money is if inflation starts to come out of control. This was a much lower than expected inflation reading this morning, the consumer prices. And we have to assume that once the price spiked above the previous high of day, it then made it above the 100 even level, and that's when the whole party started. Now, we've been hearing rumors about 100 being the new norm, but obviously this definitely confirmed people are still anxious to be above that big run over 100 even. You can see here there are 2 wave patterns here that could have easily been taken, but again, at the news, we have to follow our plan, and I skipped those 2 patterns. We found ourselves up at the highs now, right after 9:30. By 9:31, now we're up at those highs. Now, what I'll do is, I'm going to grab my Fibonacci tool, I'm going to mark up that swing high right there, and this swing low right here, and this creates now what we call our trigger zone. Now, a trigger zone, like I always say, if you're going short, it's a target. If we go through that zone, you'll trade short. Ultimately, what we want to do here is use this, right, as a wave pattern long. And you can see here, I wanted to trade short down into that zone. Boy, was it difficult though, very sloppy. You can see we came up here. Now, I originally looked for a 13 range wave long. That failed, and we took the short. That then goes into a 21 range wave long. That also failed. We took the short. So remember, I'm first looking to buy a pullback here because I'm above the previous highs. We have that target up there at 102.50-ish, right, begging us to go higher. So I'm first going to try to buy a pullback here. Okay, that fails. Now follow me down bottom here. This is my 13 range chart, and this is actually where the pattern's set up. Swing highs, right? Swing lows right there. We go up, break below the 13 trigger, break below that swing low, and of course at 9:35, right, we get nothing in, nothing out. Now follow me back up here now, and you can see why that happened. Well, momentum is oversold, and at that time, the dollar is now stuck in the middle of its range, right, making us want to pull our hair out, right? We couldn't take advantage of wave 1, wave 2, okay, because of the news. Now here we are. Of course, it's a wave failure, so I sell it off. But follow me down bottom here. Momentum is oversold. And this is really tough because when we took the trade, it began overbought. But we took this twice today. Twice this happened to us today. And it has to do with the fact that we're lower volume. Has to do with the fact the dollar was chopping around, right? Look at this look at this dollar chart. Okay, here's 930 right here. And at 930, right, at 930, we're coming off the low of that wedge, but we're sitting right in the middle. And we knew this, right? We knew this was going to be higher risk.